Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we'll be unpacking the latest macroeconomic data from around the world, a snapshot that reveals mounting challenges and a softening global recovery. Recent weeks have delivered a series of underwhelming economic indicators from key economies such as Europe, Japan, and China. Let's begin with the Eurozone, where the manufacturing sector has seen mixed signals, with the latest industrial production rising 1.7% month-on-month in May, but factory activity slowing and missing optimistic forecasts. While trade in goods reflected a surplus, business sentiment remains cautious as new orders and employment continued to lag expectations. Moving over to the land of the rising sun, Japanese exports fell for the second consecutive month, down 0.5% in June year-on-year, with exports to the United States plunging over 11%, the steepest drop since early 2021. Industrial output growth was also slower than anticipated, with US tariffs impacting critical sectors like automobiles and auto components. And looking at the world's second largest economy, China's second quarter GDP grew by 5.2% year-on-year, slightly above expectations, but reflecting a continued slowdown from previous quarters. Much of this momentum was due to exporters rushing out shipments before new tariffs take effect, a strategy that's widely expected to lose steam in the coming months as headwinds intensify. Signs of stress have emerged in Australia as well, particularly in the labour market. The unemployment rate jumped to 4.3% in June, its highest level since November 2021, while employment growth disappointed, with full-time jobs declining notably even as more people sought work. This led to a sharp drop in the Australian dollar in mid-July and immediately raised speculation that the Reserve Bank of Australia would consider cutting interest rates in August to bolster growth. These lackluster data points have triggered widespread market anxiety as concerns surrounding the durability of the economic recovery and stagflation risks begin to take root. Major banks and institutions have revised down their global growth forecasts in response to this string of weak data, with prominent analysts cutting the 2025 outlook to 2.34%, a notable drop from prior projections and below the pre-pandemic trend. Furthermore, the US economy is facing an increasing risk of stagflation, a period of sluggish growth, persistent inflation, and rising unemployment, fueled in part by recent tariff increases. Consensus forecasts for US growth have tumbled, with real GDP now expected to grow at just 1.2% in 2025, down from over 3% last year. Projections have also been reduced across all regions: the Americas, the Middle East and Africa, Europe, and Asia Pacific, with tariffs and policy uncertainty at the center of these downward revisions. In summary, a wave of disappointing macroeconomic readings, from Eurozone manufacturing to Japanese exports and Australian labour markets, has overshadowed the global outlook. China's growth is slowing, even after export front-loading, and fears of persistent inflation with weak growth are haunting the US and other major economies. The result: heightened caution, downgrades to growth projections, and a watchful eye on policymakers facing an increasingly complex challenge. And that wraps up today's episode. Thanks for joining me, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.